everybody, and welcome to this episode of the ESG and Tech Show. My name is Susan Hayes-Cullerton, and I am delighted to be here with you live on this Wednesday afternoon, the 16th of November, 2022, to have a conversation with you all around sectoral analysis this time. Well, we started the ESG and Tech Show just very briefly. Just wanted to give you a bit of a history on this, and that is because I believe the two sectors, if you want to call them those, are the two super trends, the two mega trends of this decade, I believe, are sustainability and technology. And as a result, we wanted to bring you the latest cutting edge insights on both of those areas through the lens of the stock market. So as a result, we created the ESG and Tech Show, and it is now over a year old. So we are really excited to talk to you about this today, and particularly I'm going to be looking through the lens of sector-specific analysis today. So how are we going to run this? Well, we're going to start off with looking at market timing. We're going to take a look at market timing, particularly in the US. It's been a busy time there on a political front. Of course, lots happening on an economic front as well. And while all of that is really interesting to look at and listen to and absorb, what we really want to do is understand what's going on there from an investment point of view. So that's where we are going to start off with a market timing analysis of the US. Then I am going to show you how to analyze a sector from two different perspectives. Number one is if you purely want to look at a market and think about what sectors might be most attractive for me given my particular investing style. So I'm going to show you how to look top down. So we look at a market, then we look at a sector, then we make decisions. Or what about if there's a specific sector that I want to look into? And in that point of view, I am going to be looking at that through the lens of the creativity. So I picked that one. I picked it out as one that there's loads happening in. Like we see more and more happening in theaters. There's lots happening in virtual reality. Lots of people talking about the metaverse. Entertainment is generally an area that people are happy to spend money in because it gives us memories and so on like that. But again, when it comes to an investing point of view, what if we say, right, look, I think there's loads of scope to grow in the creative sector. For example, what can I do to turn that idea into an investing thesis and, of course, then actually road test that from an investing point of view? Lots of people know that there is a big difference between a good company and a good investment. So how do we find good companies that are good investments? And also, how do we distinguish good companies from good investments? They don't share those characteristics. So that is what today is going to look like. And now, as always, anybody that has been here with me before, you'll know that I always start off in the same way, which is asking where everybody is tuning in from. So I am taking a look up right over here, top right hand side of my screen is all of your chat. So can I ask you to please do let me know in the chat there what part of the world you are tuning in from. So I'm going to take a look here and see who is joining us from where. So like I say, let's just see what part of the world you are tuning in from here today. And I see that the first answer that we have here is Toronto in Canada. Mike, you are also joining us from Alberta in Canada. Faye is joining us from Palm Springs, California. Been there. Been to Toronto too there, Fireblazer. Manju is joining us from San Jose in California. Gratefully been there as well. Hello, Mackenzie. You are very welcome. Mackenzie is joining us from Nashville, Tennessee. We have Sam who's joining us from DC in USA. Cecilia is joining us from Brooklyn in New York. Ron is joining us from Myrtle Beach. Doug is joining us from South Africa. You're very welcome back, Doug. And Martin is joining us from Port St. Lucie in FLA. I don't want to guess, because I'm wrong. Kissimmee in Florida. Oh, yes, Raymond, been there, done that. Karen is joining us from Minnesota. Hello indeed, Karen. Gerda is joining us from Brussels in Belgium. Hello, Gerda. Again, another person who has been here with us before. VJ, you're in good company among other Canadians here in Ottawa in Canada. We have Diana who's joining us from Honolulu. Hello indeed, and you're very welcome from Hawaii. Kyle is joining us from Milan in Ohio. You know, there's a city called Milan in Ohio. Oh, there was Milan in Italy, and I'm sure you've heard that a lot. And you know there's a Dublin in Ohio, which is where I'm currently as well. Eugene is joining us from Calgary. You're very welcome indeed. And North Carolina in USA, JS is joining us from. Sarah is joining us from Newark in New Jersey. Been there as well. So I'm always kind of set this little competition with myself, is to see how many places I've been whereby I'm hearing from various people who join us on the show. Philip is joining us from Mutondo in North Carolina. Been to North Carolina, don't think I've been there though. And also I can see loads of you are now subscribing. That's good to see. So please do indeed subscribe to the channel, not just for the ESG and Tech Show, but also for lots more upcoming content that happens right here at VectorVest. So, like I say, let me just run through the plan of action for today. Number one, we are going to start off with market timing. Number two, I'm then going to show you how to analyze a sector from the top down, which is that we purely start off with a market analysis, then we drill down to what are the most interesting sectors. Then I'm going to flip that entirely, and I am then going to take a look at a sector where we simply want to look at that in isolation. So if we are interested in a particular sector, how do we pursue that? And I picked one that isn't necessarily easy to find, like the creative sector. And the reason that it's not easy, one that I'm going to show you later on. Okay, so stay tuned. And of course, if you would like to, please share this episode, press the share button. Press the share button with other people who you may know in different WhatsApp groups or in Slack groups or on social media or on Facebook, which is social media, wherever you might be, or on Instagram. Please do share this link with them. As I say, we are live and I love hearing your questions, love hearing your feedback, love hearing your comments. So if you tell them to pop across now, then of course I'll be able to interact with them as well. And of course, if you're looking at this and you're looking at this when it's not live, you are super welcome as well. And please do put your comments in the chat. We'll see them there. All right, let's then head on over here and let's take a look at market timing right now. Okay, so here we go. This is what's going on in the US market at the moment. So I'm going to take this from a short term as well as a long-term perspective. What is going on in the US market? As we know, it's been a pretty eventful week in many ways over the past while in the US. So how is the market taking everything? Well, first of all, I'm going to show you the color guard. And the color guard is the way in which we understand what's going on in the market right now and understand it pretty well. So what this says here is the color guard is neutral. VectorVest advocates a caution when buying stocks at this time. Now, of course, I'm aware this may be quite small on your screen, and that's why I wanted to share this with you in the way I'm doing so. Okay, how does VectorVest come up with that? How does VectorVest come up with VectorVest advocates caution when buying stocks at this time? Why is it a yellow light? Where is this coming from in terms of neutral, and who makes this decision? So the answer is nobody, right? Nobody makes the decision. This instead is driven by our own proprietary algorithms where we point out how these decisions come from or how these decisions are made. So let me instead give you the history, a couple of days of history that has led to the color guard doing its thing. Now, what I'm trying to do here is move this across. Now I'm succeeding. Okay. Okay, now again, as I say, I'm aware that this is quite small, but let me do my best with you. And as I'm going through this, I'd love to hear what's your thoughts on the market. Do you feel it's turning? Do you feel that the latest growth that we've seen in the market, which I can see over here, can you see that the latest reaction in the market, you think that's something that's sustained? Are you in the market at the moment? Are you not? Are you preparing to get into the market? Are you not? What's your thoughts? What's your thoughts? Let's have a chat about that in the chat as I talked. Okay, interesting. Okay, so the comments are starting to come in here. So as we do this, I will take a look at what you're saying and I'll show you why VectorVest is saying what it's saying. So first of all here, what I can see is that there's a lot of yellow. And within this yellow, what this means is that the market is either in a situation whereby it's trending or whereby it's either reversing or weakening its trend. That's what all the yellow means here. Now, what exactly does that mean? What exactly when we say weakening or reversing? Okay, a yellow light here happens when the market is up day over day, so today in comparison to yesterday, but down week over week. today in comparison to this day last week, or the opposite. So it's up day over day and down week over week, or up week over week and down day over day. In other words, it's disagreeing. The trend of the market over a day and a week is in disagreement. And that's what you see when it's yellow. And that is when buyers and sellers can't make up their minds over who is going to win the battle. That is what yellow lights. So Maria says, GMVV Nation, does that mean General Motors, Maria? And you're very welcome back. Thank you for being a long-term supporter of the show. Fire Blazer says, we are in, but underwater. Yeah, anybody who's long, apart from certain sectors, are probably feeling that way. Police SWAT said, heading back to 2,500 for S&P 500. Okay, yeah, that's it's a very specific answer as regards a level. David says, in energy and related. So I'm guessing, David, you mean energy, commodities, gas, etc. Mike is in oil. Okay. Kyle says, my portfolio is currently empty. I'm hesitant to get back in. Okay, Kyle, well, let's see what we're going to say about that. So when we see an awful lot, awful lot, we can see here that we have got a lot of yellow going on, but now we can see smidgens of green. So if you're someone like Kyle, if you're somebody like Kyle and say, well, you know, my portfolio is currently empty, and I'm hesitant to get back in, well then, the first thing we might do there, Kyle, is we might see, well, what are the clues for this? So I can see here we've got 3 yellow lights here in the BSR. Now that's the buy-sell ratio. The buy-sell ratio is the number of stocks in the VectorVest database have a buy recommendation divided by the number of stocks in the VectorVest database sell recommendation. So you can see here 1.18. This is at 1.18 at the moment as regards today, the 16th of November. That means that for every buy, for every sell recommendation in the database, we currently have 1.18 buys. And that is higher yesterday was higher day over day and week over week. You can see today it's now gone down again. And this is what happens. Like, people often think, well, I should be in the stock market or I shouldn't. Is that let the market tell you what you should be doing. That's what this is for. So what it's saying is that buyers and sellers can't make their minds up at the moment, but we are seeing smidgens of green. We're seeing smidgens of green, and back in the 2nd and 3rd of November, which was 2 weeks ago now, is that back then we were seeing smidgens of red. Then that trend changed again and it powered down. So in summary, back to this point here is that in summary, VectorVest advocates caution when buying stocks at this time. It is a yellow light. It is a yellow light in general. If you're looking at the stock market from a short period of time, the consensus is that on a market-wide basis, it is yellow. The market has not decided what way its trend is going, whether it's going up or whether it's going down. At the moment, it looks like it's kind of trending more towards the upside, but that has pulled back again today. Look at them. Look at the markets at the moment. The S&P is down 0.64%. The NASDAQ down another 1.35%. The Dow Jones Industrial Average, pretty flat at 0.04 negative. And then we have the VectorVest Composite, which is down nearly 1% as well. So the smidgens of green that we were seeing over the past couple of days are all red today. We're seeing that the market is going down here. So as a result, if you are somebody who's deciding on a market-wide basis whether or not to go into the market today, the answer is be cautious, because the market is not clear. The market is not telling us whether it's up or whether it's down, whether it's trending in either direction. And as a result, that's why we're seeing yellow. Now, what would happen if it was green? If it was green, well, then that would mean that green is becoming from the various different lights again. If there's more green lights in that point of view, then we can see that buyers are pushing forward. And if there are more red lights, as you see down here, then it is going downwards. Okay, so I just want to briefly mention the other two metrics up here. Again, let me just fan this out. David says he loves my accent. Thank you very much. I get that all the time. Yeah, well, more so in America. Irish people don't tell me they love my accent because we all sound the same. Right, so over here, if you look here at the other two levels in here, one is price and one is RT. So price is looking at the price of the VectorVest Composite, which are all the stocks in the VectorVest database that have been put into our own proprietary index. When you put all of those together, is the market up or down day over day, over week? That's what the price column looks like. What color is that at the moment? yellow again. So RT is relative timing. It looks at the direction of the market, the magnitude of that direction, and the dynamics. Again, all yellow. So the market is saying right now, I don't know what's going on. I don't know whether I'm going up. I don't know whether I'm going down. So if you're going to take a position in here on a market-wide basis, just be ready to go whichever way and whichever direction I'm going at it right now. So today, as of Wednesday, the 16th of November, what we're seeing here in the market is quite simply what's on the colour guard, which is that VectorVest advocates caution when buying stocks. That's the way in which to take this into consideration. That is short-term investing, and that is today. Could this change today? Of course it could. That is what short-term, and short-term being days, hours, minutes, short-term investing, of course it could. But that is how you analyse what's going on right now. The summary is going to be here in the colour guard in the front, but up here, you're going to see where the summary is actually being driven from. What is the history that's been happening in the market over the last couple of days. Now, if anybody does want to take a trial of VectorVest and have a look for themselves and to try this out over the next couple of days, you can, of course, go on over to our website, VectorVest.com, and take a 30-day trial when you can try all of this out for yourself. If I could ask the team, please, in North Carolina, if I could ask you to put the link for the trial in the chat, then that will save somebody having to search around for it. Now, of course, if you want to understand more and more how to do this, then I suggest you can always come back for another one of our shows. And particularly Trending Thursdays happens on a Thursday, as the name suggests, with Glenn. So you can also, of course, come back and he'll be taking you through a similar sort of analysis only tomorrow. Now, that was a short-term point of view. What I'm now going to do is look at this from a long-term point of view. So Maria says it used to be all about the fundamentals. These days it's all about the Fed. Well, Maria, I mean, the Fed is a big player. You know, the Fed is a big player in the market today. I've told you all this before. I'm a co-author of an economics textbook in Ireland. The one that's taught in high schools in Ireland. I've been an author twice on that book. So it's been in schools for the past 9 years. And Maria, we never spoke about QT, quantitative tightening. We spoke about money supply and QE, quantitative easing. We didn't talk about quantitative tightening. That is something that we haven't ultimately seen before in many of our lifetimes. The other thing that's happening is, of course, you know, I find it intriguing that I was listening to the analysis of the interest rate, the 0.75% interest rate increase by the Fed recently, and the 0.75% increase in the rate in the UK. And I'll tell you as an interesting statistic about the UK, right? So the Bank of England increased interest rates by 0.75%, the biggest increase in 30 years in the UK. At the same time, as it said, the UK is probably, if not technically, in a recession. Now, this is what we absolutely did not talk about in economics. Increasing interest rates, which is monetary policy, in an environment where you've got a recession. Say what? But of course, we all know the reason for this is such high levels of inflation. Now, that's not stagflation. Stagflation is a stagnant economy with increasing costs. We're talking about a declining economy with increasing costs. So you have to increase interest rates to pull it down. So from that point of view, it's all about the Fed. And the reason that a lot of people are talking about the Fed is, of course, because the moves the Fed are making are in many cases really big deals. Like well, in Ireland, we call them Euro era. Like the Euro's only 20 years old, so that's not that long an era. But these are record-breaking or record-setting type of decisions, like the UK. Biggest change in 30 years, and to do it in a recession. And also, Maria teaches me that GM is not General Motors, but good morning. And I'm glad you think I'm funny. That was an honest mistake. Okay, Fireblazer99 says a confirmed call was given yesterday in Canada. Yeah, I mean, look, we have seen rising markets. We've seen them over here. There's been pockets of that. We can see them here in the MTI graph in the US as well. So, of course, a confirmed call can be given after the BSR goes above 1, the buy-sell ratio goes above 1, and also when we see 2 consecutive weeks of day-over-day and week-over-week growth. So, of course it can. Is it likely to happen at the moment in the US? I'll tell you shortly. I'll show you how to take a ticket. Okay, what else have we got going on here? I see Francisco says it's time to buy the pullback with good energy stocks. Now, interesting you say that there, Francisco, because how do you determine what good energy stocks are? And again, we're going to be looking at that today, is when you analyze a sector, then what do you do? Fireblazer has an interesting take on swing trading. Okay, I will leave that there. Let me see, what else have we got here? Don't fight the Fed, your spouse, or the taxman. There's a lot of people to not fight with. And QT is about to hit the market. QT, of course, is quantitative tightening. It's taking money out of the money supply. Santa Rally is only a dream at this time. Okay, interesting. And right, few more things happening there. And by the way, I love the fact that some of you are talking to each other in the chat. Please do keep it up. Please do keep it up indeed. That's what the community here is all about. Okay, now, if you're a longer term investor, then what? What do you do then from the point of view of trying to decipher what's going on? Right, well, let me open up this graph here for you. This is the MTI, the market timing indicator. Okay, so this is the MTI. This, of course, is very, very simple to read. Above one is favorable, below one is unfavorable. Does that mean you should get in right away? Well, chat about that. So the MTI, as I say, is the market timing indicator. It's market wide. We have it for each of the databases where we run, namely the US, Canada, Europe, UK, Australia. So the MTI is visible there for each of them. And as I say, it's very simply run, which is above one is favorable, below one is unfavorable. Now, the MTI, since the beginning of the year, if I go back to the beginning of the year here, has spent most of its time under one. Okay, so here is the level of one over there. Now, it might be, again, quite difficult on screen. And right, so let's say here we go. Here we're at the level of one. So it briefly stuck its nose up over one in April. Then it did quite a bit for April or August and September, for a smidgen of a second there in September, and now it went over one again jumped over one in fact. When's that? 10th of November. 10th of November, it jumped up over one. So that certainly from a long-term investing point of view would be quite favorable. Now, what we often see is clues coming in the long term, same as we do with the short term. So, right, first of all, favorable wise, we can see the MTI is above 1 and it's at 1.27. Even despite what's going on today, it's at 1.27. Above 1, favorable. Okay. The other clue that we can see here is, back to our color guard, is if you take a look at the trend of the market. If you take a look at the trend of the market as well, we can see an up trend. So we can see it's up because it's over 1, but we can also see the way in which the market has been traveling over the past week. So if I look at the 16th of November, the level of the VectorVest composite is at 55.7. If I go back to reality, the 10th, if I go back to the 11th of November, a week ago, that level was at 56.092. So no, I'm gone wrong. If I go back 5 days, 1, 2, 3, 5. Here we are now. If I go back to 5 days ago, trading days, then I'm going back here to the 10th of November. And as you can see, then it was at 55.60. So we can see over a week, over 5 trading days, there we can see that the market is increasing. And that's the primary wave when we look at it over a period of 5 days. So we can see over the period over the 5 days is that the market is rising. Now, as you can see, the primary wave is up. It's been up for the past week. So that's another clue. We can see, right, the MTI is above 1. See, the primary wave is up. So in general, over the past week, we can see here that the market is rising. You might say, hang on a second now, Susan, but it's falling today. Look, you can see it there. How could the primary wave be up? Because it's not in comparison to yesterday. It's in comparison to a week ago. And that's why, as I say, I'm showing you what a week ago looked like. Okay, so that's therefore 2 clues we're looking at quite favorable in the long term. So do we get ready to rock? Are we ready to go back in? Well, the other issue is also the confirmed call. And the confirmed call is the conservative one. That is the most conservative indicator in the VectorVest market timing series. So as you can see here, the confirmed call is down. And the confirmed call is down because it have 2 consecutive weeks of being up week over week, which hasn't happened yet. And then secondly, it also needs the BSR to be above 1. The buy-sell ratio needs to be above 1. And the buy-sell ratio is above 1 for sure. But on the other hand, we're not seeing a week over week consecutively for 2. And as Maria says here, 1 does not make a trend. And that's the point. That's the point here, is that's why it looks for 2 consecutive ones. Now you might say, hang on a second now, right? We're talking market timing indicator, we're talking confirm calls, primary waves, wah! Okay, if you want a quick, what's the word I'm looking for? Cheat sheet on this, let me show you where to find one. It's in a place you mightn't think. And that is, I'm going to pop on over here to Backtester. I'm going to create new. I'm going to build a custom trading system. And in here, when I look at the market timing system here, I can get an explanation of what everything is. So here, this is when the price of the VectorVest composite is higher than it was 5 trading days ago, the primary wave is up. If I want to see what the confirmed call is, I've explained all these already, you can see there exactly what it is. The BSR, the buy-sell ratio, needs to be above 1, and it also needs to increase 5 trading day period over 5 trading day period for 2 consecutive 5 trading day periods, and the price of the VectorVest composite has increased. So until all of that is in place, you're not going to see a confirmed call in the US. So how likely is it? Well, let's go back and see. Right, let's just test out all of these things. How likely is it that we'll be getting a confirmed call up in the US? First of all, is our buy-sell ratio above 1? Yes. Is our price higher than it was a week ago, 5 trading days ago? Yes, because the primary wave is up. Now, what about before that? So 1, 2, 3. So we're on the 10th of November here. Let's go back for that. 1, 2, 3. That is 55. Yeah, so we've 52.985, and before that was 52.744. Yeah, so as a result of 52.925, in any case, it was lower. So therefore, we can see that since it hasn't been, do this again now. Just want to make sure that I get exactly in here. Right, let's take a look here. So if we look at 56, we look at a week before, 15th. So if we go a week before, it's 56. And that is the second trading day. Down here, if we go for our second trading day, it is 53. Okay, so we can see here that was green. And if we go a week before that, and the week before that is the 2nd of November, it was 52.92. 52.925, yeah. Very, very, very close to it. So the reality is that this could, a lot of things are in place for a confirmed up call. It's just, we do also need, of course, to see that the VectorVest composite is higher than it was yesterday, and that's not the case. So a lot of the bigger things are in place. So again, I'm not going to call it, but what I am saying is that a lot of the things that are in place, that are in place or are close to being in place, are not a million miles away. If you were to ask me back here, the 31st of October, for example, the primary wave, as you can see here, was down. We can also see the buy-sell ratio was well below 1. That's far less likely to be in a position where where a confirmed call up is likely to be issued. Whereas here, the buy-sell ratio is above 1. Primary wave is up. Okay, the price is not higher than it was yesterday, and week over week as well. At the moment, we can see that it's not. It's not going in exactly the right direction, but let's just keep an eye on that. All right, what else are you telling me here? You're selling covered call options to stem the loss. Okay, if you're selling covered calls to stem the loss, I get that. That will work in a downward or, of course, in a flat market. If there is bullish behavior, of course, just make sure that you're not selling covered calls at the expense of your upside. So just make sure that that's the case, is that you're clear on that. Then also I can see here, various different conversations about different stocks. Okay, great. Now, Maria now asks what industries or sectors are moving today. So now let's get into our sectoral analysis. So let's just say we are in a confirmed up call, right? So we want to go into the market and we have no ideas about what we want to buy except to answer Maria's question. And as I say, Maria's question is what industries or sectors are moving today. How do we answer this question? Okay, so what we do is we go over here to viewer, and then we go to sector viewer. And when I go in here to sector viewer instantly, I don't have to, as you can see, I've done nothing, right? I've done absolutely nothing here except to click on sector viewer. I haven't made any customizations whatsoever to the database here. And what has happened, what you're seeing is that automatically is that we have ranked the entire database by RT. See it there? Okay, by RT. So you're looking here at relative timing. Relative timing, to remind you what that is, it is the direction of a stock, or in this case a sector, the dynamics of that as well, how quickly that it's moving up and down, or how volatile it is, as well as the magnitude. How much is it driving up, or how much is it down? If any of you want to get an understanding of any of the terms that I'm using, like relative timing, or any of the others that you can see up here that I'm not explaining, again, I'm just going to give a shout out there to the guys in the US. Guys, could we put in the link to the free stock analysis, please? If that's okay, could you please put in the link to the free stock analysis? Then you can analyze any stock you want, and it'll explain things like, in more detail, relative timing, and a lot of the others that are up here that I'm not going to have a chance to get into. Okay, so Maria's question is answered already. She says, what industries or sectors are moving today? So I've shown you what sectors are moving today because these are the fastest moving sectors in the database. All I had to do was push one button for that, Maria. Just the one. And that was sector viewer. And so number 1 is metal products. Number 2 is petroleum. Number 3 is steel. Number 4 is office. And number 5 is ETFs. And of course, ETFs is a very broad term in this case. But can you buy a sector? Well, you can buy a sectoral ETF, but that may not be what you want. Maybe you want to drill down further and to answer the other part of Maria's question, which is what industries are moving today. So I can answer that question by either drilling down to the fastest moving sectors, and then within them, we get to the fastest moving industries, or actually, let's do that first. We're going to double click here on metal products. Okay, double click. And you can see here, 2 have come up, 2 have appeared. So is that right? So there we go. There's two industries within the sector. So an industry is a subset of a sector. So metal products is made up of distributors as well as pipe fabricators and miscellaneous. So distributors are moving faster, again, as measured by RT. The higher the RT, the faster it's moving. So let's just double click again here and see what else we got going on. And then in here, we have the stocks that actually make up that particular industry. And we've loads of them with a buy ratio, buy recommendation. So for any of you that are wondering, those of you who are not familiar with VectorVest and wondering, like, how do you get a buy ratio? Like, how do you get a buy recommendation? 4 things needs to be. Number 1, it's not that any of us, it's not that anybody comes up with this. It's that it meets 4 criteria. Number 1 is that, for example, let's take Alcoa. Alcoa is a company I've seen lots of times. So here we go. Alcoa. The first parameter, the first test it needs to pass in order to get a buy recommendation is that the price, which is 48.62, needs to be above the stop price. So we can see here the stop price for this is 43.60. Right? So clearly in that parameter, it's definitely higher. Right? Price is definitely higher. The second test it needs to pass is that the VST, which is the value, safety, and timing combination. When we look at value, safety, and timing, put all of those together. And then in here, now let's consider, is this above 1 or not? Above 1 is favorable, below 1 is unfavorable. The maximum we can go to is 2. The minimum we can go to is 0.0. Is it above 1? Yes, indeed. Yes, it is. Alcoa here, as you can see, is at 1.25. That's the second test. So the first one is the price above the stop. The second one is the VST above 1. Third test is this one. Is the stock moving to the upside? Is it moving higher? Is the RT above 1? A, yes, and B, significantly so. So that's the third test that I can see Alcoa is passing. And then the last one I need to put on a graph for you. Let me get me historical graph. And that has given me the stock history. No, I'm not graph. Well, know what I'll do? I could do it by right clicking, or else I'm just going to graph selected. Right. Now, this is the next test, next and final test. I only want to look at two things. I want to see the stock's price, and I want to see its stop, because what I want to see in the stop is what I want to see is the price diverging away? Is the stock price moving up faster than the stop? Aha, yes it is. And just in case you can't quite see my quick reaction to that, let me draw two lines. I'm going to draw a line here underneath the stock price, and I'm going to thicken that up because that can be difficult to see. Style of the style, I'm going to change that to blue, and I'm going to thicken it here. Okay, so now you can all see that. Now look at the slope of that, right? Look at the slope of that. Now that pretty much takes care of how that works out, right? On the other hand, let me draw another line for you. This time I'm going to look at the slope of the stop. Right, the slope of the stop is about that. Is about that. Again, I'll do the same. Let me change the style and that. Okay, and I'm going to change it. Okay, now this is the slope of the stop for that period of time. This is the slope of the stock. So you can see here that the way in which the stop is now starting to follow up after the share price. Now we can see that first of all, they're converging together. What we need to see, what we would need to see in order for that not to be the case is that we'd need to see the stop price with a slope like that. So that's when we would say, okay, now we have got a problem. But actually, the share price and the stock price, the stop price and the share price are pretty much moving in the same slope, and there's more momentum behind the share price than there is behind the stop price. Okay, delete both of those now. So as a result, it has got a buy recommendation because everything is in place. We can see that the price is above the stop, and we can see it visually here as well. We can see that the RT is above 1, it's at 1.4. The VST is above 1. It is whatever it is back here. Close this down. It is at 1.4, and the VST is at 1.24. And we can also then see that the share price is moving faster than the stop price. So for all those reasons, we have got a buy recommendation. Okay, so that is how you would answer Maria's question, which is like, what industries are moving today? What industries or sectors are moving today? So let me just take it from the top very quickly, and then I want to give you a different way to answer her question. So we go back here to the homepage. Let's go back here to the homepage. Here we go, homepage. Here's where I was discussing the market timing with you. Now, what sectors are moving today? I go to viewer, sector viewer, and the answer to her question is going to appear in here in a second. They're the same ones that I mentioned a while ago anyway. But metal, petroleum, steel, office. Now, by the way, my software is real time. You see? So this here is real time, and my prices are live. So since then, we can see that banks have actually jumped up a little bit in comparison to ETFs. So that's why you see change there. But metal, petroleum, steel, office, bank, etc. Then if I want to get in and look at the industries, I double click. And in here, I find my two industries that comprise that sector. And then if I double click in here, then I see the stocks. And the stocks appear, not this time in terms of the fastest moving stocks. It is the greatest combination of value, safety, and timing. That is what's in there. Greatest combination of value, safety, and timing within the fastest growing industry, which is itself respectively within the fastest growing sector. That is how you would do a sectoral analysis. Now, let me just answer her question, Maria's question, in a different direction. She said what industries or sectors are moving today. What if she didn't say our sectors? What if she just said what industries are moving today? Well, I would have answered that question slightly differently. What I would do is, let me go back to the beginning again. Okay, so here we are back at the home page, and Maria then asks a question, what industries are moving today? I go over here to viewer, but this time I press industry viewer. Now the fastest moving industries come to the top. Okay, let's just give this a whirl. Right, petroleum drilling stocks appear here to the top. Machine tools, building, painting products, petroleum field services, auto and truck OEM, sector, like loads we were talking there earlier on about having energy stocks. So we can see all of those are the fastest. And again, if I double click on petroleum drilling in here, then I'm going to get the top stocks in terms of ESG. All of them this time have buy recommendations, all of them. So again, why do they have buy recommendations? Because the prices are above the stops. Look here at the price, 1880, higher than 1610. Look at them, they all have RTs above 1, all have VSTs above 1. And if I went into the graphs of them all, which I could easily do by clicking graph all, then I would also see that their prices are moving at a faster pace. Look at that. Now that's actually even simpler there to see. That's even simpler. I might just make it easier for you to see the stop there. Now there you go. Look, you can see the price of the stock is moving higher and faster than the stop over here. So that is in Patterson. Go down to the same thing here for HP. Same one, like same, right? And of course they're the same because they've all got buy recommendations. And like I say, it's not that I'm ringing Joey and saying, well, Joey, what do you think? Or asking Mark or asking Ray or asking Steve or asking any of the people who you know here at VectorVest. Our opinions aren't reflected in this. What matters here is how the parameters are delivering the information so that then you can make your own decision. Okay? Now, that is the top-down way to do a sectoral analysis. You start off with your market. Then you say, right, what are the fastest moving sectors? What are the fastest moving industries? What stocks have the best combination of value, safety, and timing? Or we could go through the very same process again, but this time, let's go into the fastest moving industry. Here we are. And maybe this time, I don't want the best combination of value, safety, and timing. Maybe all I want are simply the stocks that offer the best relative value, the best long-term price appreciation. But maybe that's all I want. Well, if you do, one click of a button here will give that to you. And that is by pressing an RV. If I press an RV, we're going to refresh the data. And here we go. Petroleum. So Petroleum International Integrated, I'm guessing that is what that is. I don't have to guess though. I could just look. Petroleum US royalty, petroleum. That is where we see the greatest long-term price appreciation. And and that is because RV is above 1, well above 1. It's the highest. When we look at the entire list of the individual industries within the VectorVest system in the US, Petroleum International Integrated is at the top. And we can see here that there's 222 industries that I could analyze here. Let me just reduce this down to 5. I'm just going to refresh my data here. Okay, here we have the top 5. And now if I double click on Petroleum International Integrated, let's take a look at what stocks are up there. And all by recommendation again. So Conoco, Phillips, Imperial, Exxon, Chevron, Murphy. So look at all these. All of them are down today, particularly YPF Sociedad down 4.5%. So this is, like, as you can see, this is why it's important to listen to what is going on in the market. So what have we got going on over here? Francisco said, is it a good idea to place an option call on the SID when you get the confirm call up? Okay. When you say place an option call, I'm guessing you mean buy, yeah, which is what Maria is referring back to there. When you say place an option call, if you're going to buy an option, if you're going to buy then and where it's heading to the up, if you feel that it's rising to the upside, which obviously the confirm call, the confirm call is saying that this is where the momentum is in the market, and that's what that position is. So if you're going to buy a call, well then that might be a way in which that you can lever the outcome with a small amount of premium. I will also say though, Francisco, oh yeah, sorry, no, they're moving in the same direction. I was just about to say there's a bit of a caution there around selling and put at that stage, but you didn't ask about that. Maria says you can buy or sell a call option depending on which direction you're heading. Yes, and now selling a naked call is is risky business. If you're selling an option on a stock that you don't have, where you fundamentally have to go on and give it to somebody else if they want it, that can be a risky business. But Maria is right. You can indeed buy or sell a call depending on which direction you think the S&P is going to go. Just be careful when you're using options about the leverage that's implied in them. Right, now let me now look at this analysis of a sector in a different way. Now we're going to look at this from when you take a specific sector and then you want to analyze it in the stock market. Okay, so what do we do here? All right, let's go back home. Homeward bound. All right. So earlier on today, I was, of course, getting ready for today's show, and I came across, like, what exactly is the creative economy? Because that was what I had said we had wanted to discuss today, is when you have a look at the creative sector. So in here, this would be defined as museums, historical places, archaeological sites, cultural landscapes, and natural heritage. Performing arts, like music, dance, festivals. Okay, on and on we can go. You can see them all there on your screen. Can you? Yes, you can. Right. Now, the question is, though, is that how can you invest in a sector like this? And this is the reason that I wanted to pick something like this. It is very difficult. How many stocks do you know are related to podcasts? How many stocks do you know are related, for example, to graphic design? How many stocks do you know is a library? Most libraries are state bodies, unless you go back to Andrew Carnegie. So the thing is that investing in something like the creative sector, while there is loads of growth going on in it, it's a really, really exciting place in media and in massive growth in podcasts and in fine arts and crafts and all those sorts of things, is that it really does put it up to us to look at this. So therefore, what I did was that I said, right, there's three ways, there's a couple of ways we could do this. How about, for a start, what we do is that we look at searching for creative industry stocks. So I found a piece in the Motley Fool that reacted accordingly, right? So there was two stocks that I picked up on here. One was Adobe. And the reason that I picked Adobe was because it said here, driven by its mission to change the world through digital experiences, Adobe is arguably one of the most creativity inspiring stocks in the market. Operating within two segments, digital media and digital experience, Adobe and its software solutions are vital components of the creative economy. However, despite its, and so on, it goes on then to explain. So when you would do something like this, you might actually end up reading something that leads you to looking at a specific stock and then analyzing it. So let's do that. So now I'm going to head on over here to Viewer, into Stock Viewer, and let's take a look at Adobe. Here we go. A-D-O-B-E. So what I did here was, when I was looking up Adobe, I thought, right, let me just go over here now to the very right hand side and see what sector this falls in under. So if I scroll over here to the right, here we are. The software over here, or the sector over here is software. Now, if I then go in and I take a look at the software sector, which of course I can do that. I'm going to go to sector. And then, rather than me search for the sector through any other metric, I'm simply going to change these to alphabetical order in reverse. Here we go. And if I look at software, and again, of course, I'm going to look at software, and I'm going to take a look at, you know what, I can't tell which one of these Adobe is in. All right, lesson number 2 then. Lesson number 2. Let's go back to our stock viewer. Let's go back to Adobe and let's find out the industry that it's in. Adobe. Systems. And I'm going to right click and I'm going to view the full stock analysis report. View full stock analysis report. And when I get the view full stock analysis report, which is what I'm suggesting a lot of you do, is, I'll scroll down here, scroll down here, bottom. The industry group is software desktop. So that's how you actually find, if you want to reverse back up, if you want to take a stock, then look at its industry and compare where it's at. Like Adobe is, let's just see how Adobe compares to the industry that it's in, and see, is that the best option that we've got across different metrics. So let me head on over there now to Adobe, or back into Adobe again. I'm going to now go to industry, double click here. And in here, oh, Right, well, I can see that it is the best, but I can also see that 4 of the stocks that are in that sector have got sell recommendations. Green Block, Artificial, IT, New Wave, Holding, and Sonic Foundry, right? So all of those represent sell recommendations. Why? Why are they sell recommendations? Very simply, because the price here at like 1.6 cent is lower than the stop price, which is 3 cents. These are penny stocks anyway. Sonic, if we look at Sonic here, the price is $1.03. The stop loss is 1. Okay, so if we go back up here to Adobe, if I was to take a look at that stock and I was just to look at it in isolation, first of all, be critical of yourself, not critical of yourself, be critically analytical of, is this the best that I can find? Like there's lots of stocks I was able to find for you today from a top-down sector analysis that had buy recommendations. I was able to find you lots of stocks that had long-term price appreciation well above 1. I was well able to find that really quickly by not being focused on one sector by doing top-down. Because I'm doing a sector and I'm looking to kind of navigate my way around that sector, just be critically analytical of what you're trying to achieve by doing this. Anyway, all that said, let me go to Adobe. And I shouldn't have clicked on recommendation, but now let me go back up here. So here's Adobe, right? So what I can see here is the relative values at 1.15. I can see it's at 1.15, right? Which is above 1. So it's good and it's favorable, but it's not as high as what I've seen in other stocks. Secondly, the RT is 0.93, which means that the stock is the direction of the stock with its magnitude and dynamics is down. And the relative safety is pretty good. The relative safety is at 1.32. So that's 32% above 1. Which means that it's certainly of what we're looking at here, it's the safest stock of the sector, the sectoral industry. But all that said, again, I've seen better than this today. I have seen better than this. And then the VST is at 1.13, which combines value, safety, and timing. So in summary, I can see here that Adobe Systems has got reasonable long-term price appreciation potential, got consistency and predictability of financial performance, and I can also see that the direction of the stock with its magnitude and dynamics of its stock is to the downside at the moment. I'm guessing that if I took a look at that graph, that it's going down. There we go. Take a look at that. So as you can see here, it's going down. Now it has crossed over. It had a sell recommendation here, as you can see, which again, of course it did because the price was below the stop. Then after that, then it certainly has picked up after that, right? So we can see that the price did pick up, and I would say that as soon as the RT goes above 1, it'll have a buy recommendation because its VST is above 1. The price is now above the stop price and the price is diverging away from the stop price. It's moving up faster than the stop price, but the RT isn't above 1 yet. As soon as it is, then it'll be a buy recommendation, assuming of course the other 3 still stay in place. So that is what's important to do, is when you want to look at a sector, is perhaps research the sector itself or look for stocks within the sector and then go in and take a look. So I also just want to show you one other piece here, is that that's one piece that I got there from Motley Fool. It suggested that, and also suggested taking a look at Unity software. I did that as well, and I took a look and we saw something similar. But again, what I saw here is that when in the case of Unity, it's designed to monetize real-time 3D environments. So you can go and you can check that one out yourself, put it in through a stock viewer and take a look at it. But it's basically a similar sort of approach there is what I put forward. So then I found another one, and this one was from MoneyWeek, and this time it was, to scroll on down past all that, no. Okay, the creative industries, stock market rally since Brexit. Okay, this is back in 2016, so this one is well out of date at this stage, but it's a similar idea, is that when I was looking for looking up ideas in a sector like this, if you look up stocks to invest in or companies to invest in, it generally speaking went way down, or not way down. It's a hard industry to actually invest in. So it brought me all into looking at private equity investment and so on. And of course, the focus of what we want to do here in this show is look at public investment through the equity market. So as a result, if you change your search term to stocks as opposed to companies to invest, then that leads to that. Okay, so similarly again, the types of companies that it was bringing up here are Nintendo, Entertainment One, DHX, and so on from there. You would do the same thing. Go into your stock viewer. Okay, right, just briefly. DHX. And I just want to make sure I answer any last questions. We refresh the data. Okay, it's got a hold recommendation, very high P ratio as well. So here you can see, for example, in a company like this, the relative value below 1 is at 0.83, so it's telling me we've below average long-term price appreciation potential. The RT is 0.9. Again, I'm guessing if I would right-click on this and I would look at the graph here, I have a pretty good idea that that stock is going down. Yeah, you see, it's not that I'm any sort of a fortune teller. Is that if the RT is below 1, then it points towards a falling stock. That's, in terms of a graph, that's what it is. So simples to analyze there. So as you can see here that it's going down, and as a result of that, the RT is below 1. And similarly as well, can I just take a look at the RS? The RS is below 1. So it's not a stock that I personally would be interested in taking a look at the moment. Again, I come back to my same point, is that when you look at a sector analysis and you start with the market and you don't have a sector in mind, you narrow it down, then you look at fastest moving sectors, fastest moving industries, and then the best combination of value, safety and timing. That is the route to move towards a sectoral and thus an industrial analysis. However, of course, you could have said to me today, how about we analyze the energy industry? How about we go from there? Or how about we pick any industry? The one I wanted to pick was creative, because it's hard to invest in despite the massive growth that's happening in the economy. And the massive growth in that sector economically is my point. And that's where I wanted to distinguish between lots of things happening in an industry versus lots of things happening in stock. Now, I'm just going to just take the question, I think the last question that's here, which is from Francisco. What is my opinion on LNG? Okay, let's see what my opinion is. LNG. Okay, energy stock. Now, you say it's been going down lately. The RT doesn't suggest that. What I'm going to do here is, first of all, consistency and predictability of the earnings looks pretty good. The value, the long-term price appreciation seems very good. And the relative timing of the stock looks like it's been going up. Let me just check that though. Telling me. Oh yeah, I see where you're going. So it's over, like, so RT, just to be clear on this, RT looks at an analysis of the stock's price trend over the last day, week, month and year. Okay, so when you're saying it's been going down lately, yeah, you're right, obviously it has, but the RT looks at longer than that. So we can see here it is a hold recommendation, and that's because the price is now moved down. The price is now moving down faster than the stop. So I'm wondering what you're asking me. Are you asking me, do you sell? Are you asking me, do you buy? What I would do is, obviously, first of all, look at what the market is telling you, and we went through all of that at the beginning. If this was a position that I wanted to look at something apart from gut, I would be looking at the RT. I'd be looking at the relative timing of this stock. And if the RT went below 1, that is a time that you would really need to be considerate about what your position would be. The reason for that is just look over here at what happens. Now, I could pick any stock in any database across the board and we could run this exercise. But look, when the RT goes below 1, you can see the price fell after that. And then when it goes back up over 1, it generally picks up. Down here, it fell below 1, then it fell down. And again, we're late in the show now, so I could, if you look over any of the shows that any of us do here at VectorVest, lots of us will talk about how to use RT as helping you make a decision on a single basis. Another way, if you wanted to make a more conservative decision, which, you know, can work out too, is just watch out for when it might reach a sell recommendation. A sell recommendation is when the price falls below stop loss. So I think that's where you're going, is that you're asking me on the basis of having the stock and how you can use VectorVest to help you guide your own decisions. The two things to watch out for is RT, the two things to watch out for are RT and the sell recommendation. Okay, everyone. Well, as We are now right on time, and I want to thank you all very much for being here with me. My name is Susan Hayes Cullerton, and as I say, I'm the host of the ESG and Tech Show. Thanks so much indeed to Joey, who's here to produce the show and ran it through everything with me beforehand. And I've one last thing to say. If you are thinking of joining us in January, please do check out VectorVest.com/Tampa, because that is where we've got the first in-person show of 2023. Yes, 2023. I have to check myself there. So please do check that out. Of course, we always love Tampa. It's always the time at which we get to meet, obviously, VectorVest subscribers in person, and there's also a live stream. But the other thing is that it sets out our stall for the full year, and it really gives us a great opportunity to just lay out what we are looking at for the year ahead, changes that have happened in the company that we can help you all the more, and of course answer a bazillion questions and interact with you all along the way. So please do check that out as well, VectorVest.com/Tampa. So on that note, everyone, thank you indeed very much for being here with me, and also please do share this episode with other people if you feel it's of interest to them. But from me, Susan Hayes Cullerton, live in Dublin, take care everyone, and have a great